Hey everyone, welcome back to the channel. My name is Dee and this is Market Focus. Today I'm going to talk about novice investors, novice traders. Specifically, this will probably pertain mainly to people who have done exquisitely well very quickly investing in crypto. But I'm also going to talk about something else, which is kind of a common trader issue. And that's the problem of being in a trade with some extremely good profit, but you don't want to take profits because you want to see
where it ends up.
Now, this is actually a psychological issue that can decimate accounts when you're a trader or an investor. It's based on nothing more but greed. So you got into a trade, you caught a trending move, and you're watching all of that money on the table. In your head, you're dreaming about that new sports car, a big house, hot new wife, but now the price starts to turn. It goes into a correction, or maybe even a bear trend. You don't know, we don't know, because it's an uncertainty environment. So now you're sitting in half the amount of profit that you had, and you're still holding on. You're hoping that it's going to go back up. All of your dreams now start rapidly melting into oblivion. Now, eventually what happens with a lot of new traders is that they don't want to sell, right? They just hold on. They hold on as much as possible. So eventually the trade goes into a drawdown and eventually hits the stop loss. And if you don't have a stop loss, it will wipe out whatever you have in that account. So what happened? You had a good trade. You didn't book profits. Why? Usually it's because people don't have a clear exit strategy. As traders and investors, especially with longer term positions, we can't be sort of like high on hopium. You know, the market is just going to keep going and keep going. And it's been very, very prevalent in the crypto space because, you know, we've had some excellent returns there. And now people are kind of thinking they're untouchable. This is how it is. But something very interesting happens when your trade goes into profit, when you're untrained. You start wanting more and more money because being right on the direction, it's not even about the money, it actually signals your brain that this is your reward. And that releases a neurotransmitter called dopamine, responsible for the feelings of pleasure. It's also what makes drugs so addictive. They also cause a release of dopamine in the brain. So now you have all of these new crypto people who are like, yes, I really like trading. Okay, but will you like trading as much when you get yourself into that inevitable drawdown period? Ask yourself. When you're sat in, one position that has gone either nowhere for months or it's going into a blatant correction and your trade is underwater, how much will you like trading then? Now, anytime you win, or you're sitting in that trade that is in a lot of profit, your brain gets that injection of dopamine dose. And that makes you feel like you're on top of the world. Now, if this keeps happening, if you do a few trades and they happen to do well, your brain will learn from this experience. And you actually get wired to believe that this is something you really enjoy doing without having any real skill or without even knowing how you actually got to the profits. When it comes to the markets, you cannot control the outcome of your trade. It is an uncertainty environment. So if you've had some early success and luck, especially trading cryptos, it's very likely that your novice trader mind is not going to be prepared for the times when things get very, very uncomfortable. And inevitably, everyone who trades long enough will get there. This moment will come, okay? The drawdown period will happen to you. So we have a whole new breed of new millennial and post-millennial traders who think that products rising and falling like 40 to 60% in a week is normal. But let me remind you that having new markets that suddenly go, totally crazy, that's nothing new. We've had other new markets like penny stocks boom back in the day. People thought they'd found the ultimate gold mine. And a lot of the penny stocks would skyrocket from like 0.02 pence up to like $3 or $5. Not every penny stock, obviously, because most of them were worthless. So even if they had like a quick move up due to some one-off event that, brought the odd trader a bazillion% return, ultimately most penny stocks were delisted, taking your investment with it. And when the stock is scrapped, you don't get your investment back. It's not how it works. Now, does that sound familiar? Crypto coins are essentially, that, especially the ones that are essentially worthless, that have nothing fundamentally going for them, they're not attached to any kind of utility underneath. Now, what can happen with those coins is that they can and do disappear without a trace. Except in crypto, it's much, much worse than penny stocks. And I mean much worse. Anyone can create a token and list it. Whereas with stocks, you have to go through this pesky little process called the IPO. So all of you guys who think it's perfectly normal to make, 40 to 60 to 100% returns in a month or 1 week, inevitably when things settle down with the cryptocurrencies, either through regulation or a shift of focus to something else, the same thing will happen. Returns will go to normality. Meme coins will not be going, 11,000% in a year. And if you have been trading the markets long enough, then you would have seen this before. New unregulated markets going crazy with ridiculous returns, people making $1 million and then deciding that they're suddenly the grand wizards of trading, suddenly become impromptu advisors for their cousins and aunts and moms and dads, only to lose them, their life savings, and then some. Very dangerous, very risky. Early success in trading teaches you nothing. So remember that a real test of someone's trading and investing skill is time. It's not about how fast can you get to $1 million. It's how well can you keep that $1 million in the weeks, months, and years to come. And when you do get into a drawdown period, what you will experience is that you will have a rise of the stress hormone, cortisol. As the stress builds up, because you've now lost a few trades on the bounce, or you have some trades that have gone really badly underwater, now you feel compelled to keep looking for new coins, new trades. Even though, over at your rational part of the brain that deep down that that's a terrible idea. In every single case that this happens, it's because the process that you've used to generate the initial amount of cash was not systematic or not systematic enough. It wasn't really based on any solid strategy, risk management, early exit strategies. It was based on what? Some Discord chats, a few Twitter posts from, crypto whales, and basically getting ideas for investments from any Tom, Dick, and Harry on the internet, who are usually hiding behind, whimsical usernames like Crypto Sensei and Avenging Wizard. So if you are a novice investor and a novice trader, this battle of dopamine versus cortisol can be avoided if you set some hard exit rules for times when things won't be so peachy. So not just profit-based rules. If a trade works out and if it goes into profit, the story is done there. Generally with investing, profits take care of themselves. But when things go wrong, one easy way to set a rule that works both for drawdowns and for profits is to have a time-based exit. So for example, you give it 3 months. If your trade doesn't reach the target in a certain amount of days, weeks, or months, you will close it, wherever it is. Profit, no profit, it doesn't matter. Now with cryptocurrency investing, especially, there are no dividends unless you are staking coins. I'll talk about this in another video, but generally if you're just investing in various coins, it's all about price appreciation. That's how you make money. So if the price doesn't go away from your entry, or you time your entry wrong when the market is going into a correction, you don't make money. Whereas with some stocks and with staking coins, even if the position itself goes into a negative, you will still get a dividend or a share of transactions done on the coin itself. You have these automated market maker systems now that operate in crypto space. And of course, there are other more advanced ways to have like a hard exit rule, such as looking at where the first problem area is on the opposing side. This is supply and demand 101. It works in any man-made market. There are solutions to these trader issues, but obviously the first step is to identify them. Because as a novice trader, if you don't know what the problem is, you won't be able to solve it. Because if you've never dealt with a tough market before, if you've never had drawdown periods, if you've never had things go wrong for you in investing, you won't even be aware that there are issues that can occur. And that is the worry that I have with young investors. All of them in their sort of late teens, early 20s, they all think that that's how the markets are, that that's what investing means. So this video should serve as a huge kind of risk disclaimer to anyone who has made money in crypto really quickly, to Try and learn more about money management, risk management, hard exit rules, why they exist, to have some sort of contingency plan for when the markets are not doing particularly well. Like, for example, right now. Now, I'm in my 40s, but I actually have young people that we know who have done exquisitely well. I am German. Who have done exquisitely well. Some of the stuff that they say is really quite worrisome. When I ask about, so where are you going to exit? The only response that I really get is, oh, when it hits that number. And I'm like,
so what happens if it doesn't hit that number?
Oh, I'm not selling. And it's like, if it goes into a bear market, you're going to have to sell at some point. So how much of the money that you've made are you prepared to lose? 10%, 20%, 50%, 70%, 90%? Because when it gets to 90% loss, you've actually blown the account. It's a very serious thing. So as much as we want, we cannot get away from our survival instinct, from dopamine versus cortisol responses. So the sooner you start learning about how to deal with those, the better off you will be going forward in your new investing career. So don't end it before it starts, okay? If you've had some early success, try and keep it. When I'm developing trader skills, I'm always using positive and negative reinforcement techniques. It's all a part of my professional development program, but obviously I go one step further when I'm getting involved personally with the Gold members. I highly suggest that you check out at least the supply and demand course that I have, which is like a very quick basic course on how the supply and demand really operates on an institutional level, and that definitely applies to crypto. So anyways, that's it for now. Thank you so much for watching. Don't forget to like and subscribe. If you want to see more videos that deal with different trader issues, common and not so common, please check out some of these videos. Thank you for watching, and I'll see you next time.